I'm excited to come to you today to give you a few tips that are going to help you to save on your mortgage interest payment. So now when you buy a house, it is usually 30 years mortgage, and you pay a lot of money in interest over the life of that loan. But today I have these 5 exciting tips, and I really want you to sit tight so that you are going to digest this, start taking action to save more money over the life of your loan. Stay put and let's go. Tip number 1, increase your monthly payment. What do I mean by that? Let us say your mortgage is $2,000 per month. That's how much you pay per month. If you decide to increase that payment by say $100 a month, and then instruct the loan servicer to apply that $100 towards your principal, it has the potential to reduce the number of years you will pay off that loan significantly, and that saves you a lot in interest payment. I am going to give you an example here. Let us assume that you have a mortgage of $350,000 and your interest rate is say 5.999, and you are making $2,000 payment every month. If you decided to add $100 and apply it towards the principal, then you will be able to pay off that mortgage about 3 years and 3 months sooner than expected, and that has the potential to save you about $63,000 in interest payment. Isn't that great? Take note of this tip, and you can save some money in the long run by adding $100 or even less to your mortgage payment and apply it towards the principal, and that will help you so much in the long run. Tip number 2, do a bi-weekly payment. By bi-weekly I mean, so if you pay $2,000 a month, take that $2,000 and divide it by 2, and then make that payment every 2 weeks. What that happens is that normally if you pay the $2,000 monthly, you will make 12 payments at the end of the year. But if you divide it by 2 and you make the payments twice a month, then at the end of the year you are going to have 13 payments. So you have made an extra payment on your mortgage. So do this and you are going to thank me later. Tip number 3 is for you to refinance your mortgage. The benefit of refinance is that it has the potential to reduce your interest rate, because how much you pay on your mortgage really depends on your interest rate. So if you hear that interest rates have dropped, I encourage you to refinance. Now, when you refinance, another encouragement is that maintain how much you have been paying, but then shorten your loan term. So if your loan was for 30 years at 5.999, and let's say for some reason like what happened in 2020, interest rates dropped down to say 2.5%, and you refinance and you get a 2.5% in interest payment, then maintain your $2,000 payment per month, but then take a 15 years loan term. That way you are going to pay off that mortgage 15 years or so sooner, and you are going to save a lot in interest payment. Tip number 4, make a lump sum payment towards the principal. So let's say for some reason you get some $50,000 from some deal that you made, and you had an extra $50,000 and you don't really have anything to do with that money immediately. You can decide to call your loan servicer and then make a lump sum payment. So if your mortgage was $350,000 and you suddenly have a $50,000, why not take that $50,000 and deposit it towards your principal, and now you have a 300,000 loan left. And then if you apply the other principles, especially number 1, then you are even going to pay off that loan much sooner, and you are even going to save even more in interest payments. Tip number 5 is for you to make extra principal payment. Now I want you to understand that the interest is on the principal. So the higher your principal, the higher the money you are going to pay at the end of your loan term. So if you have the means to target the principal and bring it down as soon as you can or as fast as possible, you are doing yourself good by saving a lot of money in the long run. So make a payment, extra payment towards your principal. Attack your principal, because that is really where the problem is. It is the principal and the interest rate. So if you can reduce your interest rate, go for it. If you can reduce your principal, go for it. Do not say no one told you, because I am here today at this time telling you to aggressively attack your principal amount, and that will be saving you a lot of money in the long run. So if you enjoyed this video, please do not keep it to yourself. Go ahead and share, like, and comment. If you have any other thing you want me to talk about, please leave it in the comment section, and I'll be glad to make another video on that. But until then, click on the subscribe button so that when I upload the next video, you'll be among the first people to be notified. I look forward to seeing you in the next video.